Welcome to the Daily Update, where we'll go over the action in the market for Wednesday, January 26th, and then see how things look for Thursday, January 27th. And it was a pretty crazy day, not necessarily a surprise in the market overreacting to what's happening. What was a surprise is that we had a pretty positive tone right from the open. We gapped higher about 1%, and prices held up. And then after the Fed came out with their announcement, prices continued to climb. The market seemed to really like that. And then we had the press conference from Chairman Powell, and the markets did not like that. And they used that as a catalyst to go ahead and start selling. All the gains that we saw were lost. We ended up going negative. But going into the close, we saw a little bit of renewed buying. So depending on how you look at it, it's a continuation of the downtrend scenario that we're playing out. If you're looking for a bounce, we tried to get one, but then later in the day, those gains were given up. So it just depends on your current perspective right now. We are trending. So if you're doing sideways strategies, some of your strike prices might be in trouble a little bit. If you're doing trending based strategies, you're probably playing the downside right now. So just to announce what I've been announcing right now, and as soon as February 1st comes and goes, this slide will be gone. But I am starting a private Facebook group. It is free, but it will be moderated so that we can kind of control what is being said in there. We don't want a lot of irrelevant discussion going on, but I want discussion. And so if you find this useful, I want you to feel free to participate. I'll be posting a lot of different things that you can react to, but if you have interesting things that you want to post, maybe an article that you run across, an opinion, or a stance that you have as far as the market is concerned, feel free. That's what this room is for. No self-promotion or political discussion. We'll save that for other places. We want to keep focused on specifically the S&P 500, even though we do mention the other markets. We want to have spirited and lively discussions. We want to have the ability to have a lot of Q&A, as well as the potential for live broadcasts. And again, the best way to contact me would be john@spxinvesting.com. And even if we start off kind of slow with this group, that's okay. I just want to build it the right way, and I would rather have it go slowly than having a bunch of people come running in and everything's all crazy and unorganized and people get frustrated, and it doesn't serve the intentions of this group. Okay, so let's get back to what happened on Wednesday. We did gap higher at the open. The futures during the night were pretty strong. We were up anywhere from 0.5% to even over 1%. And so we did gap higher at the open, and it remained strong. This was one of those times, probably because of the Fed meeting, where we didn't see selling into strength. People wanted to just take a step back and see how things were going to play out. So those prices remained strong, and we held up pretty well. And then after the announcement came, the markets initially liked that, and the S&P 500 was up over 2% at one point. And then everything switched at about, 1:30 Eastern time, when the Fed press conference started. That's when things really shifted over. And Chairman Powell is kind of the takeaway from that is he's more hawkish, meaning that he wants to raise interest rates. They're going to stop all these buying programs, these quantitative easing programs. I'm starting to hear a thing about QT, which is quantitative tapering, where the Fed is going to start getting rid of those things that help to stimulate the economy. And that sent prices lower. And so the gains were lost, and the S&P actually went negative. Going into the close, there was some buying, and I'll show you on the chart, and we were down 0.15% on the day. So it doesn't look like it was that big of a deal from Tuesday to Wednesday, but inside the market, there was a lot of things happening. Volume was above average, and the fixation, and even though this happened on Wednesday, this carryover fixation on the Fed meeting will probably continue. We do have weak technicals, although we did see a little bit of improvement in some of our charts. We're still in the middle of earnings. People are still worried about inflation and interest rates, and of course, the geopolitical concerns, specifically between Russia and Ukraine. So some comments that we can make. Powell's comments provided a selling catalyst on Wednesday. Despite the decline and the midday sell-off, some of the charts are showing improvement that I've mentioned. We are continuing to be overvalued. Prices are way ahead of where they should be on a valuation basis. The trend is negative and the bias remains negative. So let's look at the day's session. First is sentiment. We're not showing any extreme fear. In fact, this improved a little bit over Tuesday's chart because of the strong up day that we had for most of the session. But we're kind of in about the mid-range right now, as far as this chart is concerned. Then looking at the VIX, and I do have two different charts of the VIX. One is just the closing, and the other has the open high-low close. And this can be seen kind of negative, where we saw something positive when the VIX really fell on Monday. Well, then on Tuesday, that wasn't carried through. And then on Wednesday, yeah, the VIX was really starting to decline. But once everything started to sell off, the VIX really picked up and it closed near the highs for that day. The sectors, most of them were negative. In fact, I think we have 9 out of the 11 are negative, and it's pretty much across the board right now. Either whether it's a growth play or a value play, everything except tech was up a little bit on the day. That's because it had been up so strong earlier in the day. Even with the decline, it still eked out a positive for that sector. Then just showing where things have been moving since our recent all-time high. Energy is still in the lead. Discretionary is still having the most trouble. As far as inflation, the BDI continues to drop. Our Fed watch, we can take January's chart off now, and now we start to focus more on March. After this hangover from the Fed meeting gets out of the way, I might stop putting these charts up for a little while, just because they're not really telling us anything. And now we still have to wait till the middle of March until that meeting. And to watch this doesn't really tell us much on a day-by-day basis. And then when we get closer to that meeting, I might throw some of these charts back on there. But after the meeting, I just wanted to show you what these look like, where we're pretty certain that they're going to raise interest rates anywhere from 1/4 to 0.5% at the March meeting. We're starting to see some more conviction for the May meeting, where most people are thinking we're 0.5 to 0.75% at that point. And then going into the June meeting, also leaning more towards 0.5 to 0.75% to a full percent. At that point is currently the conventional thinking. And then I'm bringing up the July chart now, where we're spread more across the board since there's so much uncertainty. Now, the interesting thing is, if we start getting a lot of economic reports that show the economy is really slowing down, that could really hurt the Fed. And because raising interest rates is what they do when things get going too fast. Well, if things really start to slow down, and with interest rates so low, what can they do? And I brought this up in yesterday's video, where if things really start to slow down, this could really have some problems economically, because lowering interest rates is not necessarily an option, because you can't lower them below 0. Well, you can, but the Fed has never done that. But the Fed is also doing things that they've never done before. So we might see renewed quantitative easing. We'll just have to see. how this goes. I don't want to play any scenario out right now. We just kind of want to watch this unfold with each day. Okay, I got this far until I had to cough. As far as the technical alerts, a lot of the positive ones were generated earlier in the day, where oil sets a 4-year high. Again, not happy if you're going to the pump. As far as the S&P 500, it did cross back above 4,400. So that was seen as positive. The intraday chart here, way over on the right, where we see a gap higher at the open, a little bit of renewed buying right after the open, then some selling into strength, and then we pretty much dance sideways. And this is typically what you see during a Fed day. You don't really see a big gap one way or the other, but after the open and things kind of settle down, you tend to see a real drift sideways, usually with an upward bias. And we just kind of drifted over, and then boom, the market initially spiked up. This is when the S&P was up over 2%, and we kind of fiddled around, but we were holding in there. And then after the press conference really got going, this is when you saw a lot of the selling come in. That was overdone. And so you saw some initial buying that led into the close. And so overall, we were up just a fraction of a percent, or down just a fraction of a percent, but there was a lot of movement within the day's session. We don't really have anything new to show on this chart, just to show you how the daily chart is unfolding right here, where we did put in a new high, at least for this week right now. I guess not for the week, but we had Monday, Tuesday, Wednesday. So that is because we had a high during this session, that is helping some of our charts look a little better. Now, they haven't changed, but they're at least, they picked up on that, and they're showing a little bit of improvement. Currently, from the all-time high, we are down 9 and 0.31%, just a little bit less than what they call correction territory. And there's nothing magical about 10%, 15%, 20%. Those are hard definitions, hardcore definitions, or static definitions, just for people to know, okay, if it's 10%, that's called a correction. If we get to 20%, that's when we switch over and call it a bear market. For us, that's okay, I guess, but the financial media really loves to do that because they like to label things and they like to make things simple, because the people telling you this information really have no idea what they're talking about. So they just have to come up with these little slogans and statements and definitions for things just to give them talking points. So, but from this perspective, we're not into correction territory. We've drifted in there with the lows of the session at times this week, but on a closing basis, we're not there yet. We did see a little bit tick up in growth, and that was mostly due to tech. Even though it sold off, it held up better than some of the other sectors. And I'm gonna have to try to pause this. I have a cat that is demanding some attention. Okay, the cat seems to be happy, at least for the next couple of minutes, but we did see growth tick up a little bit in spite of losing a lot of the gains. Value went down just a little bit. As far as our trend, we are in a negative trend, and with prices really spiking up and staying strong for much of the day, that really brought the negative reading on the ADX down. Now we are trending overall, but the negative signal in red did fall a little bit, and the green did turn up just a little bit. You can read that a number of different ways. That means that we're not extreme negative, and so we may be able to resume the decline without it registering an extreme reading, or because we saw selling taper off and buying pick up just a little bit, that could be seen as positive. So depending half full, half empty, you can look at this chart either way, but clearly the trend, the other indicators that we use for trend are showing that we continue to be down and that the S&P 500 is in a trend. So be careful if you're getting into sideways or neutral positions, because if we really get moving one way or the other, your strike prices, if they're not placed very far away from where we're at right now, you could take a hit on some of those. As far as our breadth, even with most of the day being positive, by the time things closed based on price and volume, we did see a decline in the overall advanced decline line. The ratio is also ticking down a little bit and starting to get even more toward the extreme negative reading. New highs and new lows continue to taper off, even though with the push up that we saw, we did see more new highs than new lows, but overall we're still trending down. Short-term basis, our moving averages are rolling over. The 20 continues to show weakness. Those stocks in the S&P 500 that are below their 20-day moving average continues to fall and is extreme negative. Those that are below the 50 continues to fall, and those below the 200 also are falling. We're kind of dancing around the 200-day moving averages right now. If we had closed near the highs, we would have regained the simple moving average. Well, that didn't happen. And with the decline, we even lost the exponential moving average. Then this is a new chart, and I have a number of these charts, and I've been playing with this for a while. These are just some static indicators kind of out of the box that I use. Where at the very top line, these are stocks in the S&P 500 that are above their 50-period moving average. And we're showing an extreme negative reading, which is not surprising. These are stocks above their 150-day moving average, which is going extreme negative, and their 200-day moving average, which is also extreme negative. We use this like an oscillator. When things get too far extreme to the upside, that's an overbought signal. When things get too far to the downside, that's an oversold signal, and we're looking at a slowdown, if not an actual reversal at times. Then the MACD, again, it's just falling and falling, and it can't get up. So it just continues to roll over here. And on a short-term basis, this is one of the positive signs that I saw. Even with the decline, the Swinland short-term oscillator, it started to move up just a little bit based on price and on volume because of the high spike that we saw in the bar for Wednesday. McClellan oscillator, it's based on closing prices, so it continued to fall. Stochk RSI is pegged in negative territory. Then the rate of change is showing extreme, but it's starting to turn up ever so slightly. The 10 period, it continues to fall. 20 period continues to fall and actually went a little bit sideways. The 50 period continues to be negative. And this is really starting to go down. This is the 200 period rate of change. And we're getting down more into that extreme negative territory. Standard deviation, we've fallen pretty far, pretty fast. And so this line continues to advance, showing that we've gotten away from the average price. And we would be looking at prices to pull closer to their standard price or their average price. The percent B, it's finally starting to catch up, the Bollinger Bands as they recalculate, and we're coming off of an extreme negative reading right now. Williams percent R, it came out of oversold territory and turned up a little bit on Wednesday. As far as our intermediate term charts, the 50-period moving average continues to show weakness. The PMO, is negative across the board, both with price and volume. Our other PMO study, extreme negative when we're looking at the PMOs that are rising. When we look at the buy signals, that is also declining, and the PMOs that are even above zero continues to decline. BPI, with the decline in prices, some new point and figure sell signals were generated on Wednesday. Our rainbow still holding up, but the short-term moving averages are starting to see what's happening and beginning to roll over. Stochastics, they're coming off of a short-term oversold condition. Same thing with the intermediate term. Long-term, they're still negative, but a little bit of a turn here. So that's one of the slight improvements that we can see. Vortex coming down a little bit on selling pressure and coming up a little bit from an extreme negative on buying power. Summation index, again, based on closing prices, so we're down based on price and volume. All of our momentum oscillators are still negative. The Chaikin money flow, yeah, with the downward close, we're showing a bit of continued weakness. The CCI is trying to come up. It hasn't generated an official oversold signal yet. The Ulcer index, after coming down a little bit on Tuesday, well, with prices declining, it gained on Wednesday. And here's the longer term view of that same chart. The Copic continues to decline. Longer term, again, we're going into areas that we haven't seen since the COVID plunge. The boom indicator, it's trying to turn up ever so slightly, but is still very, very negative. The Sean trend meter turning up just a little bit after Wednesday's close. The RSI is pegged extreme negative. The special K is rolling over. This is a longer term indicator. And here is the longer term view of that chart. The Schond oscillator, after giving an extreme negative reading for the first time in a long time, right, just barely an extreme negative reading, it popped up, but rolled over just a little bit. The money flow index is trying to show a bit of a bounce. That's one of the slight improvements. As far as our trading systems, this was something that I really noticed too, is with the upward movement on Wednesday in the Elder system, we switched over to a blue bar, which is more neutral, where these had been red, which is clearly negative. What we want to see, if you're looking for a bounce, if you think we're going to change the climate back to positive, is we want to see continued buying where these bars actually switch over to green. But the SAR continues to be negative. Our different charts, the Heikin Ashi chart continues to be negative. The Kegi chart, even though it was up a little bit, it's still red, which is negative overall. And our Renko chart continues to show the decline that we've been seeing. Three-line break is still kind of in flux as it's trying to put all of these negative movements together. Equivolume, because we had a down day, the bar was red, and we're coming up from an extreme reading on the ease of movement indicator. And this was another slightly positive thing. With prices spiking up a bit for most of the day, the point and figure chart actually drew a green X. So it's painted these yellow. Now this could all change if we continue to decline. This is just how it looks now. So this is switching more over to a positive look as far as the point and figure chart is concerned. Our long-term, again, the S&P and equal weight continue to move in lockstep. Our broad markets, we show the large caps or the S&P And the mid caps, which had been having a really good day, but they sold off, and the small caps, which had been having a really good day too, also saw significant sell-offs. And the cat is wanting to be a pain. Okay, we'll see if the cat leaves us alone for a little while, but this is not positive looking right now on all the different indexes. And this is just a longer term view showing how we're rolling over pretty much across the board. The FANG stocks, they had a really good day there for a while. People liked what was happening with Microsoft, but we ended up giving up all of those gains and even closed down 0.26%. ARK was down 2.5%. The Dow, again, you might see a little bit of positive here where on Monday we had our real low, and then on Tuesday we had a little bit of a higher high. Wednesday we had a bit of a higher high and a lower high, a higher low right here. That could be seen as a little bit positive. Small caps, again, are pretty much going sideways. They see some kind of a good move and then give that all up, or they see a decline and then they show some improvement and we end up pretty much going sideways. Mid caps, kind of the same thing right now, but they did close near the lows of the session on Wednesday. The NASDAQ, again, had seen a pretty good bounce until things sold off. So we'll just have to see how things continue from here. The NASDAQ 100, kind of the same thing. It had been having a really good day. It participated in the sell-off and closed not at the lows, but near the lows. Then the NASDAQ with the VIXN, where it had been coming down as prices were going up, but with the sell-off, we saw a real increase. NYSE, kind of the same thing, a series, at least for the week, of higher highs and higher lows right now, which you could interpret as slightly, ever so slightly positive. Wilshire, it was having a good day, but then gave most of that up. And here's just the longer term view as we're dropping below the 200-day moving average. All stocks continue to fall overall. Then looking at some of our world indexes, China is still ever so slightly positive. Emerging markets, where we're seeing Europe, Japan is rolling over, and the US is rolling over. Our broad market, copper, continues to go sideways. I just show this just to see if something happens in the market, because we'll try to see some economic hope from copper. But right now, it's not really telling us anything. The dollar, because interest rates are going to be raised in the near future, at least that's the scenario right now, that means dollars are worth more. They're more precious. It's more expensive to borrow them. And so we are seeing the dollar holding up fairly well. We're well into the 96 range right now. And then the weekly chart, as it figures its way out, it's above the blue moving average. This chart I meant to delete because it's really not telling us anything right now. Oil was up on Wednesday, up over 2%. Gold, again, we chopped a little bit sideways. Everybody's screaming for a breakout, and then poof, it went down. And then another chart that I keep an eye on is palladium. And you can see into, especially 2020, after the COVID plunge, how palladium really, it's the precious of the precious metals. It really shot up and then gave almost all of that back. Well, we're starting to see some real advancements there. I don't really read anybody that talks about palladium. I just keep an eye on this chart and notice that where gold and silver are not really doing much, potentially palladium could be seeing a real move up. Silver, again, it fell on Wednesday. And then the CRB index, it was up little over 1.25% on Wednesday. And we're gonna go back to that. We're just showing the overall intermarket analysis here with oil clearly in the lead since we go back to the beginning of this chart. With the S&P falling, the dollar going sideways, gold rolling over, and bonds having some trouble. Then Bitcoin, it's down at the time I started recording this. We're back down into the 33 range, but it did see a bit of a bounce on Wednesday during the day session in the US. As far as bonds, we saw an uptick in interest rates pretty much across the board on all different maturities. And we saw that especially in the US and the UK, where we saw a bit of a decline in Japan and the German rates continue to be negative and bonds continue to fall overall based on price. So what is our outlook for Thursday? The downtrend is still intact. The short and intermediate term oversold condition continues, but there are some slight signs of improvement. As I tried to point out in these charts, we're still in the middle of earnings season. On Thursday, we have the GDP advance estimate, which comes out. That's a pretty big deal. And also durable goods come out. There's also initial jobless claims and all the usual things that we get on Thursday. And then we have to keep an eye on the geopolitical events between Russia and Ukraine. So what is our conclusion? We are in a downtrend on a short-term basis, intermediate-term basis. And then I'm switching this up because I'm starting to see more weakness in the longer-term charts. So we are positive with our long-term trend, but we're starting to see signs of weakness right now. So thank you very much. Have a really, really good day, and I will talk to you again in the next video.